The way I look at charts is whether or not I want to trade them, like go long, go short, etc., and whether or not I think they're high probability has to do with where I think the price is going to go. And I look at three different things, and this is the easiest way to break it down. The first thing I look at is where's the liquidity on the chart? Where are the shares owned? The second thing I look at is where's the general bias of the chart? Is the average person who is long in control, or are they in profits, or is the average person who is short in profits? And then the last thing I look at is what is the structure of the chart? How are the channels organized, because price always moves in channels, and where are the channels on all the time frames? And you put all three of those together, and then you kind of get an idea of whether or not you should take a trade or not. So here's Kava, super bullish. I don't know, some sort of news happened or something. I don't know, I didn't look at the news, doesn't matter. But this thing is marked up like crazy for me because I traded it before. But you have this massive D1 channel through here all the way, and we just hit off the bottom of it and then broke all the way through to the top. Also, using anchored VWAPs, you can see where the average bull or bear is in control. This is the highest I can make it. So as soon as we're above this point, the average bear, the average person short this stock is losing. They're not in profits right now. And the average person who's long this stock is in profits. You don't need to have every person in profits. You don't need to have every single bear in profits or bull in profits. You just need to have a little bit more bears than bulls to have the price in your favor. So we also have this break through this price structure through here, this algo line. And algo lines are really just liquidity-based channels, essentially. And then if you look down in through here, these are all the high volume D1 candles. There's a lot of liquidity in here, and I have a bunch of levels marked off on the highs and lows of them. But you just need to know basically a lot of shares are owned through here, but like up in there, it's not really a lot of volume. Like if you look down in there, there's not a lot going on up there. So if people are really hungry to buy shares, there's liquidity available all the way up to about here, and then it's a little bit sparse. You're probably gonna have to jump the bid more aggressively and get a worse price up through there. So when you're looking at this thing intraday, you can see, okay, right out the gate in the morning, it broke that and then just ripped. So it's just going and going and going and going and going. You have this tight channel all the way up. So this channel is unbroken all the way. You rarely see these types of moves, but when you do, they're very strong. The relative volume is monstrous. It's like 4.34 times relative volume, and it never really goes below 2.5, 3, 2.8 all the way through the day. So this thing is motoring and it's super strong. SPY is strong, like strong enough, basically. The CPI was flat, and this is consumer cyclical, so I'm guessing something based on inflation or whatever decided to have institutions change their mind on this stock. I don't really care, doesn't matter. But this is what's happening. So we have a breakthrough here. The average bull is in profits. Next, there's all this liquidity through here. Next, we know that it's broken this channel structure and it's just found support long term as well. So how high will this thing go? We don't really know. All we know though is that if this thing gets too extended, it has to go back and retest levels, because there's no point for them to go past through here because there's no liquidity up through there. As they continue to buy and buy and buy and buy and buy, they get a worse and worse and worse price for their order fills ultimately. And if there's a constant bid, they have to keep bidding, otherwise they're going to get left behind. But once you reach these certain points where there's no liquidity, or where we're too extended from retesting these levels through here, you know there's going to be some kind of pullback. Now, depending on how strong this stock is, who knows? But if you can add in the fact that SPY was bullish enough, the CPI was flat on probably an inflation-sensitive stock, there's no liquidity up through there, you can probably go long until about here, until about the last high volume D1 candle. So those are the three different kind of things I look at. I look at where the channels are on all the time frames. The channels through here, the channels pulling back, the channels intraday, and also the balance between bears and bulls, and also where the liquidity is. The last thing I look at too is when I'm buying a stock or when I'm in a stock, I want to keep it in the channel that I'm trading. If I have it break my channel that is on the time frame that I want to keep the trade at, then I'm probably out. Like, you don't have a chance. Typically what happens is when these types of channels break, like this type of thing right here, if this thing breaks, The best thing you're going to get is a breakdown and then a retest of this as resistance and then a dump or like a sideways move. You very rarely see a channel break down in the opposite direction it's going in and then come right back up inside, unless it has to quickly test something and come back up. But it's a lot more rare. So as soon as you get this channel breakout, you can at best expect a bounce through there or some sort of sideways motion typically. Now, you can stay in the straight if you want to, but now your time frame for how long you have to keep your money in risk on this expands. You might not get any more upward action for the rest of the day. Do you want to hold this overnight? Maybe you're in a larger channel. Maybe we're rocking this channel right through here. Maybe this is the channel you're working through here. It's all channels though. And so on this one, let me delete this one and I will create a parallel line. Maybe this is where this thing is going to be going in. Maybe that's what this channel looks like. I don't really know. I don't know the answer to that. Maybe it's down there, there. You kind of have to watch the price action. Maybe this was the original channel. It broke way high and maybe it's going to bounce off here and then continue up. You have to keep looking at these things contextually. Typically, I would look at it like that. That's kind of how I would look at it right now, knowing that I have a lot of clear room above because I just found support off it, but I'm pretty damn extended. So usually what happens on these big D1 algo breaks is that you need to eventually see a retest of the AVWAP through there. The algo for sure and the AVWAP, they usually kind of coincide together. So typically at some point in time, we're going to see a test through here back up. The only reason why you wouldn't see that is if the material news on the stock changed as well. So that's my like rambly rant about looking at kind of tickers and stocks and engaging things. But I'm analyzing trades right now, so stream of consciousness.